Picture this. You have a crisp $100 bill. You could spend it on dinner, shoes, or gas, gone in an instant. But what if you planted it instead? That $100 could be the first step toward your financial freedom. Every fortune starts with a small, deliberate choice, just like this. You don't need thousands to begin investing. Today, $100 gives you access to the same tools the wealthy use. This is your invitation to start building wealth, step by step, with no jargon or gatekeeping. Investing is about shifting from consumer to owner, buying a piece of companies, putting your money to work. Forget the myth that you need a lot to start. All you need is the decision to begin. Let's explore how to turn that $100 into your first investment. We'll break down what investing really is, how to do it safely, and the exact steps to get started today. By the end, you'll have the confidence and knowledge to take action. Your money can grow while you sleep. It all starts with this one choice. Ready? Let's get started. That $100 is your ticket to a wealthier future. Let's clear up the biggest myth: investing is not gambling. Gambling is betting on chance. Investing is buying real assets, pieces of businesses that make products, provide services, and generate profits. If those businesses grow, so does your investment. Investing is about discipline, research, and time, not luck. A gambler chases quick wins. An investor plans for steady, long-term growth. The real power comes from compounding, where your earnings generate more earnings over time. As you invest your $100, leave the gambling mentality behind. We're not chasing jackpots or hot tips. We're taking a smart, deliberate step toward financial security. Investing means becoming an owner, not a bettor. Remember this difference. It will guide every decision you make. Treat the market as a tool for building wealth, not a slot machine. That's how you protect yourself and grow your money. Now that you're thinking like an investor, let's talk about managing risk diversification. Don't put all your eggs in one basket. If you invest your $100 in just one company, you're exposed to big risks. Diversification means spreading your money across many companies and industries. If one fails, the others help balance things out. But how do you diversify with just $100? Enter the ETF, Exchange Traded Fund. An ETF is a basket of investments. Buy one share and you own a slice of hundreds of companies. For example, an S&P 500 ETF gives you instant ownership in 500 top US companies. No need to research individual stocks or worry about one company's bad news. With ETFs, you're betting on the long-term success of the entire economy. It's the simplest, smartest way to diversify from day one. Let your $100 work as hard and as safely as possible. So, where should you put your $100? Here are 3 smart, beginner-friendly options. First, fractional shares. Buy a piece of expensive stocks like Amazon, even with a small budget. Second, ETFs. Buy a single share of a broad market ETF like VEO or VTI for instant diversification. Third, high-yield savings accounts, TRISAs or US Treasury bills, prioritize safety and earn steady interest. Fractional shares let you own big-name companies. ETFs give you a hands-off, diversified approach. TRISAs and T-bills protect your money and beat inflation. Choose based on your comfort with risk. There's no single right answer. The key is to get your money working for you. Each option is a smart first step. Pick one and start building your future. Ready to take action? Here's how to invest your first $100. Fast. Step 1. Choose a brokerage platform like Fidelity, Schwab, or Vanguard. Look for no minimums and commission-free trades. Step 2. Open an account online. It's like opening a bank account. Just follow the prompts. Step 3. Link your bank account and transfer your $100. Once your money clears, you're ready to invest. Step 4. Decide what to buy. Fractional shares, an ETF, or a HISA/T-bill. For an ETF, search its ticker, like VO, click buy, enter your amount, and confirm. The platform will handle fractional shares automatically. Congratulations, you're now an investor. Bonus tip: set up auto invest to put in a little each month. Consistency is how you build real wealth. The hardest part is starting. Now you've done it. Keep going. You've started investing. Great! But beware of common mistakes. Don't chase hype or gamble on trends. Viral stories of overnight riches are rare and risky. Avoid day trading. Most people lose money trying to outsmart the market short term. Your advantage is time, not timing. Don't check your portfolio constantly or panic during market dips. Never invest money you need for essentials. Keep an emergency fund separate. Only invest what you can leave untouched for at least 5 years. Don't get lured by complex products or secret strategies. For most, simple, low-cost, diversified investing works best. Stick to your plan, keep it simple, and avoid distractions. Simplicity is your friend. Dodge these pitfalls, and you'll stay on track. We've covered what investing is, how to do it, and how to avoid mistakes. Now the most important parts start. Don't wait for the perfect time, just begin with what you have. That $100 may seem small, but it's the start of a powerful habit. Once you invest, you break the barrier. You become an investor. The real magic is in consistency. If you invest $100 a month, compounding can turn it into over $135,000 in 30 years. The habit is priceless. Every dollar is a vote for your future self. Don't let fear or procrastination hold you back. You have the knowledge, tools, and starting capital. Take that first step. Open your account, deposit $100, make your investment. Years from now, you'll remember this as the day you took control. Financial freedom starts with a single step. Start now.